In this video, I'm going to teach you how to spot the right order block. Order block trading strategy. It is a very powerful trading strategy that I personally have used to make money from the market. And if you can master this particular trading strategy, you'll be very good at trading. You become profitable. One thing I noticed is that most people don't know how to mark good order blocks. There are thousands of other blocks in the market, and most of those other blocks that I see in the chat won't work. There are only few that are going to work. And if you can spot the right other blocks, you become good at trading. So that's what I'll be teaching in this particular video. Before I get started, please do to give this video a like. If you are new, subscribe button on the bell icon. So the first thing is, what is an order block? Order block simply means blocks of transaction. There are large block of transactions that comes into the market when big financial institutes pump money into the market. So these are like TV scenario where you can spot other blocks. Some of these other blocks are good, while some are not. So basic I understand it is that other block consists of three candlestick. We have a bullish order block. We have a bullish under. We have a bullish order block and a bearish order block. These examples are for bearish order block, but they are exactly the same for a bullish order block. So we have three candles, a green candle, then a large red candlestick. So a basic understanding is that when the red candle should engulf the green candle, and then all you need to do is simply mark out where the red candle started from. The green candle started from, simply mark it out. That is basic understanding of what order block is. So this is basic understanding of what order block is. When you see a green candle, then three red large candles that causes like three large red candles. When for the green candles, you can simply draw it at the beginning of the week to the end of the week. Draw it at, and this is your order block. So you should be expecting price to come back to this particular place. Again, if you notice, let me move this box. If you notice this candlestick, this candle, you observe that the wick of this candle is higher than the wick of this candle. And so the wick of the green candle is higher than the wick of this particular red candle. This means that this green candle have sweep liquidity that is above this particular place. So here when you want to draw the other block, it is actually safe for me to draw it from the beginning of this place to the end of this particular place. But in this particular scenario right here, where do you think your other block is? Your other block should be this particular candle, because the wick of this candle is higher than this wick of this particular candle, which means that this particular candle has cleared up liquidity. So when you want to draw your other block, it should be from this particular place to here. This is your other block, so not this particular candle. So as you can see, the candlestick does not matter. When you see large transactions, all you need to do is to look for that candlestick that has cleared up liquidity. It is that candlestick that is your order block. I don't know if you understand me. And also a good order block, there should be a fair value gap, or it should causes an imbalance. By imbalance, I mean if you check this three candlestick structure, the ending of this particular candlestick is here, while the ending of this particular one is in this place. And if you draw it out, you see that there's a space in between, and it is that space that is called what? Imbalance. So it is that space that's in between that is called imbalance, which means that this candlestick causes an imbalance. So when you see an imbalance, you know that price usually come back to fill this particular imbalance by entering into this particular other block. So when the next time you are spotting another block, if you spot another block, there are sweep liquidity, and also another block that causes an imbalance. In this scenario too, there's also an imbalance in this particular case. You can see the wick of that candlestick and the wick of this candlestick did not meet, which means that there's an imbalance. No matter how small the imbalance is, matter how small, there's always an imbalance. You get the reason why most people can't find this in chart is because you're out there looking for large imbalances. You're looking for the one that is very visible. No, even as tiny as it is also an imbalance. And also, other block can be seen no matter the candlestick does not matter, just like I've said. Just like I've said, the candle's color does not matter. Once you see large transactions moving downward, all you need to do is to look for the last candle before that last transaction and draw it out, and that is the other block. So in the next phase, I'm going to open up the chart and we are going to spot other blocks together. Practice makes perfect, repetition makes perfect. So the more other blocks we spot in the chart, the more you become comfortable spotting other blocks in the charts. So guys, this is the chart, and as you can see, we're going to spot our first other block. If you look at this particular place, we have three candlesticks, one, two, and three. So just like we said, our other block is this green candle. As you can see, the wick of this candle is higher than this, which means that this particular candle, the wick has sweep or has taken up liquidity. All we need to do is to simply take our brush and draw our other block out like this. As you can see. But guys, as you can see on this particular candlestick, even if we draw to this extent, you notice that the price did not come out to this particular other block. This is because our fair value gap, the imbalance here, it is too big, it is too wide. Yes, the imbalance is very large. So when you see a large imbalance, what do? Make use of the Fibonacci retracement tool. When to do is to drag it from the wick of the candle to the end of the candles, to the end of the wick. Then see this is your 50%. This is where you should take your trades from. So I'm going to drag this to our 50% mark. So this is where you should take your trade from. Yes, see. So price usually eventually enter into this particular range, which is between this 50 to 61%. Yeah, but you not get our other block. So when you see a wide fair value gap, this is what you should do. Guys, this is another other block. As you can see, we have about three candlesticks, one, two, and three. So normally we draw this particular one as our other block, but you can see that this particular red candle, the wick was higher than this, which means that this one has swept liquidity. So to draw our other block, we just have to draw it from the wick of this wick to the end here in this place and draw it out. Guys, can see this will be our other block. Very easy. If you check, when price hits this place, price went down massively. So we just have to look at to see if we can find more other block in the chart. It might not be easy for us to find, but when you eventually see, know that it should be a good one. You get when you actually see a good another block. And for this particular one that we saw here, you can see there was also a fair value gap as you can see on this particular place. I mean that this was actually a very strong other block. So I'm just going to go through the chart and see if you can find another fair value gap to show you guys as an example. So guys, I think that will be all. I want you to go through the chart and see if you can spot as many other blocks as possible. Repetition equates mastery. So if you want to master this, you should be able to spot thousands of other blocks in the charts. And they might not occur all the time, but when they occur, you should do it to be able to spot them. So guys, we'll be ending this video now. If you find this video helpful, please do it to like, subscribe, and turn on the bell icon. I'll see you in my next video. Peace out.